Still with me, Edwin Suryadat and Mr. Vicky Amarnani from Monex Invest in the Futures. We are talking about Eurozone financial crisis and its impact toward Indonesian economy. Well, Mr. Vicky, share with us the figure you have here, the percentage that actually Indonesia is not the only country who are going to raise the subsidized fuel price.
Of course, yeah. I mean, in fact, America has already increased the price of gasoline by 15% this year. China last week announced that they are increasing the price of fuel as well, which brought a bit of correction in the Hang Seng, but now the Hang Seng index is back up rallying. And of course, Indonesia is rising the price of fuel a little quite hefty by 33% from 4,500 to 6,000. But so that can bring a bit of volatility in the short term, but eventually it is positive for the stock market and for the development of the country. Like these funds, the subsidy funds, will be devoted for the infrastructure of the country, which is good. Yeah.
Do you think it's late for Indonesian government to raise up the subsidized fuel price?
I would have hoped that maybe they would have done it in a slower process compared to 33%. That's why the initial talk was 20%, in fact, not 33%. But if it has to be done, it needs to be done. That's why I have this slight feeling that maybe they may not raise it to 6,000, but at least 5,500 rupiah for the price of premium. But I mean, yeah, eventually it has to take place.
What the Indonesian government and monetary policy makers especially should do in addressing the impact on its economy, since there are also concerns on inflation, as we talked in the previous segment, and the lack of availability of US dollars. We're not talking about foreign currency.
Well, I mean, I guess government has to stimulate growth. They have to keep unemployment low, so most people have good incomes and they are willing to spend that money. So, you know, I mean, inflation is okay. You have a bit of high inflation, it's all right, as long as you have the growth. But if you have high inflation and no growth, then we lead into a case where it's called stagflation. The country has no growth, but there's no problem. I don't see any hyperinflation. And besides that, lower monetary easing from the government, reducing interest rates, is a positive to support the economy to grow. So I think that is under control. And maybe the other thing is the price of oil. Oil is now at $107 per barrel. I think eventually over the next 1 to 2 months, the price of oil has to gradually come down and settle near the $100 mark. Yeah.
So you don't see any possibility to have like hyperinflation thing in Indonesia?
No, maybe a temporary concern for 1 to 2 months, but I don't see this as an ongoing thing throughout the year.
What impact the Eurozone debt crisis will have on bond markets, let's say, for the short term?
Okay, bond market. Indonesia bond market, in my view, is very, very expensive because people have diverted from investing into Europe, US, more developed nations, and investing into emerging markets such as Brazil, Russia, Indonesia, China. And Indonesia has been one that has been eyed because of the investment grade rating in December and in January by Moody's and Fitch. So I think the Indonesian market is very good, but the yield isn't that attractive because, for example, on a 5-year Indonesian government bond, the yield is only about 3.5%. Yes, it is much higher than the US interest rate of only 0.25%. I'm talking about US dollar bonds here. So this will be well supported because US interest rate is only 0.25. So even though a 5-year paper of Indonesian government bonds is yielding 3.5%, people still find it much more attractive and in some ways safer because US Treasury yields have become very volatile as well. So that is an attractive investment for Indonesian government bonds, but you cannot expect a big capital appreciation anymore because the rally has already taken place. It has already been into investment grade. But yes, if you're a bond investor, I would definitely advise to have some of your exposure to Indonesian government bonds or other bonds such as Pertamina. Pertamina 10-year bonds are yielding around about in the 4% to 5% range as well, which is attractive. For the higher, maybe for the investors who have a bigger risk appetite, they can invest into bonds such as Bumi, 12% 2016, which is yielding about 8-9%. But then you're going to see more volatility in those kind of bonds.
Previously, I asked you about how insulated our country. If we can compare with other neighboring countries, maybe you can share the figure. How insulated are they as well towards the potential impact of the Euro debt crisis?
Yeah, I mean, this point is very interesting. I mean, first of all, Indonesia exports to Europe is only about 9%, 9 to 10% out of the 204 billion exports, record exports last year. But if you see in terms of share, how much is the export as part of the GDP? Indonesia exports only contribute to 21% of Indonesia's GDP, whereas other neighboring countries such as Malaysia, their export account for 81% of the GDP. Singapore accounts for 75% of its GDP. Thailand accounts for 57%, and China may be slightly higher, but about 25% of GDP. So we can see that the domestic demand contributes about a big percentage, in fact 60% of Indonesia's GDP, and the export is only 22-23%, which is very, very healthy. So even if exports drop by 30-40%, the impact on Indonesia's GDP will not be as big as neighboring Asian countries. So no country is insulated from any crisis, but Indonesia is the best insulated.
That's at least our hope for the long term.
Yep.
Mr. Vicky, we are going to continue with this one.
Thank you.
Make sure you are staying with us on Economic Bus. After this, we are going to talk more about Eurozone financial crisis and its impact toward Indonesian economy. Stay tuned.